last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside, like Riot Blockchain before it shot up 10,000%, Digital Turbine before it shot up 789%, and Overstock before it shot up over 1,000%. This power gauge comes from the legendary Mark Yusko. And right now you can get a free in-depth look at how his power gauge system works. A way to type in any of the 4,000 different tickers and see exactly where the stock is most likely to go next and in any type of market. Simply go to powergaugetrial.com for your free look. Again, that's powergaugetrial.com for your free look. All right, let's get to our segment today. Hi everyone, I am Daniela Cambone, thrilled to be with all of you today for going digital, investing in Bitcoin and blockchain. What does the future hold? And what a time to be holding this educational conference, obviously with so many questions surrounding the fall out of FTX, of BlockFi, and of course earlier this year, Celsius, Voyager. So many uncertainties surrounding the future of this industry. Is it strong or not? We have an all-star panel for you. And joining me today as my co-moderator is Darcy Daubaras. He is the Chief Financial Officer of HIVE Blockchain. Obviously, this conference is brought to you by HIVE Blockchain and Bitcoin Magazine. Darcy, so nice to have you as my co-moderator. I should say that Frank Holmes, CEO of US Global and obviously the chairman of HIVE, was supposed to join us, but he was cheering too much in Qatar, lost his voice and could not take part. But Darcy, thanks for stepping in here at the last minute.
You're welcome. I'm very glad to be here. And I was talking to Frank a couple minutes ago. Wish he could be here, but his voice just won't handle it. He's a big fan, and he would rather be here, I'm sure, than sitting at home taking care of his throat.
And if Frank is watching, I'm sure, so drink that lemon water, Frank. We need you back on your feet ASAP. But Darcy, obviously a lot of ground to cover today. Excited to have you as my co-moderator, obviously. Don't want to take too much time from the intro. I want to get to our first guest. But if you could just frame up for us a little bit about what's going on inside your head, given all this crypto carnage that's going on right now, and how HIVE is navigating this. How are you guys doing?
Yeah, every time you wake up in the morning, it seems like there's another story coming out, as you'd mentioned, whether it's FTX or just the general economics around the Bitcoin space, where we've got difficulty continuing to rise, but you've got the Bitcoin price falling. And one of the things that we've continued to do, and HIVE has been through this once before, this crypto winter that happened when we were a pure Ethereum miner. And the big thing that we've continued to do is take a look at our costs and find a way to stay shut down when we need to. That's what we did back, 2 or 3 years ago with Ethereum. And you've got to be watching your costs all the time and be very mobile and be able to turn on a dime. And I think one of the big things that HIVE has is we're low debt. And I think that that's the contagion that's happening with a lot of these miners out there and exchanges, is they're putting up a lot of what they think at the time is capital that they can handle, debt loads they can handle. Right. But when it gets up to 12, 18% and Bitcoin prices go down, you're going to see more fall. So it's tough. So we're continuing to just look at this daily and be very mobile on what we're doing.
Yeah, so talk to us a little bit more about the contagion and, the downfall of other miners here, because I'm happy that HIVE is able to stay afloat here, because given, the higher energy costs, Bitcoin price down 20%, you have global competition up. I mean, how can miners survive this?
I think it's trying to be aware of the situations they're in and try not to go big big picture and do everything at once and think that the bull run is going to continue forever. I think that when we were back at Bitcoin at 40, 60,000, a lot of the miners thought that, that was more of a norm and we were going to continue to go up from there. But as we can see, it's an extremely volatile market. And we talk about this at HIVE all the time within the industry, is just how quickly it can turn on a dime. And we can all the miners can be doing the right thing. And it's the external factors, whether it's something in China, when China had theirs shut down, with a contagion that happens with COVID, that affected all of the miners to be getting equipment out of China, supply chain for the chips. They're still having issues coming out of Taiwan with the chip manufacturers. So it's something that you need to be able to adjust, and having the low cost energy, which a lot of the miners, especially in Canada, have with the green energy, it makes a big difference. And being aware of your debt load. And I think, when things were at 60,000, a lot of the miners, put up their ASIC chips or their Bitcoin mining equipment as collateral against their loans. And when things change, you got your back against the wall.
And before we bring on Mike McGlone, our first guest, Darcy, just quick thoughts on what you feel is the state of the cryptocurrency industry right now. Obviously, a lot of questions circulating, and that's why it's so important to have educational conferences like these right now, because people are just scratching their heads thinking, where is this industry going? I mean, is it in a healthy state or not? Your point of view.
I think it is. I think that, it is in a healthy state. Some of the ones that have fallen off have been unfortunate, because I want everybody to stay alive and to stay running, because it just builds the industry. And whenever one of our competitors falls by the wayside for whatever reason, it makes the economy weaker, and it puts out some negative connotations to the public about the industry. So I think it's strong. We're continuing, all of the miners continuing to look at their costs to be as efficient as they can, looking at ESG strategies so they can be part of the community, part of the ecosystem to make it stronger moving forward. And, some of the contagions that have fallen off, aren't, realistically aligned with Bitcoin miners and the ecosystem. Some of them have just been, in my opinion, scams and, a Ponzi scheme. It's maybe not, by the true definition, but, they've, stealing from Peter to pay Paul. It's just not, it's unfortunate that a lot of us get painted with that same brush.
Well, you survived the first crypto winter, so you're a survivor, Darcy. And like I said, I'm happy to have you as my co-moderator today. So let's bring on our first guest, Mike McGlone, Senior Macro and Commodity Strategist for Bloomberg Intelligence. Good to see you, Mike. I think you're in much warmer weather than I am. Very envious. How are you?
I'm good. Hello, Daniela, and a pleasure to meet you, Darcy.
Nice to meet you, too.
So, Mike, I was watching, the recent interviews you've been giving, and one thing that jumped out is that you've said that Bitcoin could crash 40% after this FTX crisis drama.
Yeah, that was a major shock.
How so? What are your thoughts? Yeah.
So first of all, I do think it's technical, fundamental, and just lessons you learn in trading and markets. So Bitcoin could easily now reach that 12,000 to 10,000 support level. I mean, that would be very low in my view. But how it happened is quite significant because it happened on the back of extremely low volatility. 30-day volatility in Bitcoin just dropped to the lowest level ever versus the NASDAQ, versus S&P 500, versus crude oil, and versus Bloomberg Commodity Index. They're most of different things. It just got very low. So its indications ready to break out. I thought at some point it was going to break out upwards, but it's breaking down with a good fundamental reason. Collapse of FTX and his as Darcy mentioned, there's just plenty of scams out there. So it's got a good reason to go down, and it's got the fundamental technical signals to do that in the short term. But I look at it as within an elongated bull market, and I like to compare that to the opposite in crude oil. Crude oil had a big bounce within an elongated bear market this year, and I can dig into those details later. But that's where we are right now. The key thing to remember is Bitcoin in terms of market cap and cryptos in terms of market cap is a rounding error compared to what's happened this year. The example, the total market cap of cryptos dropped about 1.3 trillion this year based on data in marketcap.com, coinmarketcap.com. That's the equivalent of two stocks. Amazon and Google dropped about 1.4 trillion so far this year. So it needs to be put in context of what's happening. This is the ebbing tide for all assets. Cryptos were the fastest on the way up. They're going down the fastest, and they're probably going to be the first one to come out of this and recover. We're just not near that point at the moment.
I think one of the biggest questions I get, Mike, is, okay, why make the case of why Bitcoin would still be around? Because you've heard this is no surprise to you. What was it, iPad? What was it, the Nano was the first generation of the iPad. That's no longer around. So you'll hear that usually the first generation of any technology does not stick. Why would Bitcoin? Why should we believe in it still?
We know there's 21,000 or so crypto assets listed in coinmarketcap.com. Maybe 100 of those will be legitimate and really matter in the next 5 or 10 years, and maybe 12 of those really matter now. And yes, there's a risk that Bitcoin could not be the one. That's why we launched the Bloomberg Galaxy Crypto Index in 2018. Part of the reason, to me, that's the ultimate way to really track this space for institutional investors, be able to push a button, track an ETF that tracks the physical. To me, that's going to happen. It's a matter of time. And this issue of FTX will tilt the regulation that way, but I agree with you. Why Bitcoin? I don't know for sure, but remember, Bitcoin is the only asset that I've ever seen that is no one's project, no one's liability, and it's the most fluid 24/7 trading vehicle I've ever seen, and it's becoming a digital version of gold and a world going that way. And then you have 12,000 wannabes. Now, Ethereum is a pretty significant measure of technology that I view as kind of akin to futures were almost 50 years ago when they came out, and ETFs were maybe 30 years ago when they came out. But yeah, I'm not certain it's going to be Bitcoin, but sure is showing the signs of surviving 1,000 cuts.
I know in a past interview with me, you've said you think this crypto winter will last longer than the last one, mostly due to the Fed's sledgehammer. We're speaking, right as Powell's about to give his speech, so we'll see what that does to markets. But have you pivoted? I'm sorry to use that word, but have you pivoted at all?
No.
On that? Depending on where
so I'm glad you used that term. That sledgehammer to me is pounding out the foundation for gold, long bonds, and eventually Bitcoin to trade more like those risk-off type assets, and it's just a matter of time. The key thing from the Chairman Powell, there's going to be no surprise from this. He's going to come out still pounding because he has to. Inflation's still high, and if you look forward, his risk-reward is still he needs to get inflation down. But we're at the point now that we're heading towards a very 1929-ish type scenario. The whole world is tilting towards recession. That's just not my view. That's the view of the curve. What's happened with commodity spike in the past and Bloomberg economics team. Yet most central banks in history are still tightening. That's typically an oxymoron compared to what's happened in the last 40 years of markets. So that dangling carrot of liquidity that helps save everyone is not there. And Powell knows he can't put it there until we have potentially lower plateau and risk assets. Because number one means commodities. Still the only one that's still up on the year. It's just cryptos have been the leading measure of speculation and excesses of excess on the way down, and we're never going to see the ease of ease from the Fed as we have in the past. So that's the stage we're in right now. But if there's any market, I mean, cryptos have already backed up 80%, and you just don't want to get too bearish when things are 80%. I think we're in the final stages of this bear market for cryptos, but it's not going to be easy. And typically markets don't just make V bottoms. They have to make it as difficult as possible. And the key thing I learned trading, especially bear markets, is they'll make you lose your hair. They'll take money from everybody, and they have to be volatile and difficult. But that's the key thing. Remember, this is not a crypto winter. This is an everything winter, except for one asset class, the commodities. So commodities have to go down. If they don't, the Fed's going to keep tightening until they do. And so that, to me, is the way I look at it. And then at some point, we're going to come out of this. But right now, as we head towards the end of this year, and we see chairman still pounding, we see the Fed fund rate expectations for next year, still for more tightening a year from now. That is bad for all risk assets. But then let's look forward. Right now, and let's just look at the price of Ethereum. It's $1,200. At the end of 2019, before the whole COVID thing hit, it was 100. So still up 12x. It's holding good support around 1,000. It might get a little bit below that, but I fully expect that to come out ahead and to continue that upward trajectory over time. The key thing to remember, and I have to leave you with this, is Bitcoin and Ethereum, the two stalwarts in this space, have declining and definable diminishing supply and increasing adoption and demand. From a commodity standpoint, something's got to change in that trajectory. And I fully expect the adoption point to increase after bumps in the road, and prices have to go up over time. And then let's remember what Ethereum is doing for this space. It's allowing the most widely traded crypto assets, crypto dollars. If you click on volume on any one of these websites, Tether's number one, then there's a dozen of them. It's allowing this to happen, and the whole world has gone to the dollar organically through crypto. So when you talk about CBDCs, good luck, China. Good luck, Russia. The world's already gone for the dollar. It's just a matter of proper regulation in the U.S., which is going to accelerate now with the collapse of some of the recent firms you're hearing about.
So are you saying that the U.S. dollar will continue its strength here and not roll over then?
In the big picture, macro, yeah, I'm like, okay, give me a better option. I mean, it's just a lesson. You look at a dollar chart, trade with a broad dollar, it goes back from the Fed, goes back to 1962 or so. It has a major propensity to do one thing. It goes up, and the only time it goes down is after it goes up a lot. Corrections within a trend. Why? Because what's the better currency? It's a measure, is like Churchill says about democracy. The dollar almost always appreciates against a basket of currencies until you come up with a better basket. There might be one or two in there that'll do okay, but not against the basket. Cryptos are just a good example, and this is the thing I started pointing out years ago with the proliferation of crypto dollars, is cryptos are a good example of the world tilting for the dollar and away from the yuan. Why? We know why. I mean, there's so many things going bad in China, yet they're just the least worse in the U.S. So sure, the dollar's a little expensive right now. It's got really too expensive. It's bounced back. The Fed's tightening. The rest of the world's trying to catch up. But, you know, overall, the dollar's still one of the best ways to transact and transmit value and do it quickly. But do you want to hold a dollar for a long term? But you want to use it to buy things. Cryptos, gold, long bonds, those are the kind of things you might want to hold in long term. And eventually we'll go back to the stock market. But that's still one of those assets that I think people are realizing. Go ahead.
So you don't see CBDCs impacting the narrative for Bitcoin?
Oh, no, and Bitcoin is a complement to CBDCs. I look at the crypto dollars are akin to euro dollars were when they started about 50 years ago. And it's just the crypto version, tokenization of assets, just getting started. I mean, what stops this process? Dollar was just the first one tokenized in the bigger picture, NFTs and things like that too. But I don't see that stopping. And the key thing in Bitcoin is like the gold is the space. It's digital gold. So you hold on Bitcoin for the long-term prospects of the opposite you see in any commodity, except maybe gold. Declining supply, increasing demand, price must go up. By the time the world's going digital, do you want this benchmark digital asset, or do you want to risk not being part of it? To me, most of the world's tilting towards, I'll buy dips in that. It's been a little bit early. It's getting hammered lately, but technology is still there. It's just the way you get to it. Some of these centralized exchanges are having issues. And then you look at CBDCs. Is how do you define DC? Just remember this real quick. China wants to launch a CBDC, but in the U.S., all you have to do is regulate crypto dollars like we do banks or primary dealers, and it's already happened organically. That's the key thing about this space, where the U.S. is not going to mess up.
You mentioned digital gold, and I have to bring this up because I had the gold bugs writing to me, during this FTX fiasco, saying, "See, they've been calling it digital gold, but how can you say it's digital gold and Bitcoin when it has not preserved wealth?
Oh, it's the greatest wealth creation asset in the history of mankind. So let's talk about preserving wealth. I fully expect gold in dollar terms is going to break above $2,000 an ounce probably next year and never look back. It's technically and fundamental to the foundation. The trigger might be a pivot from the Fed or wimping out, as Norda Rubini says. So I'm bullish gold, but I look at gold as if you're holding gold in this world that's rapidly going digital and you're not adding some cryptos, Bitcoin or Ethereum to that space, most notably Bitcoin, you're at greater risk of falling behind. I look at it as why take that risk? And to me, that's where the world was going. There was recently an article from Harvard about potentially central banks buying gold, just piggybacking on what Saifedean Ammous wrote in his book, The Bitcoin Standard, almost 5 years ago. It's just a matter of time. And you have to expect digitalization and technological advances to go backwards. And for Bitcoin and gold fit together. And one thing that's happening is every day that goes by, just this year alone, the relative volatility of Bitcoin is dropping versus most other assets. Why? It's new, it's nascent. And let's just ask Blockbuster what they think about Netflix.
With the time we have left, Mike, I need to get your thoughts on FTX. First of all, I want to know where you were, what you were doing, and what you thought when the news broke. Were you surprised?
Yeah, very much surprised. I got to meet Sam at the SALT conference in Bahamas. I think that was in April. Met him with Anthony Scaramucci, and that was where we all were duped. And to me, it's much more important what this means. Now, coming from a futures, a highly leveraged speculative futures background, where 20-to-1 leverage is normal in daily trading, this is unfortunate, but it's normal. It's the same recipe, different day, different instrument. High speculation, commingling funds, and too much leverage. I've seen it happen with so many firms. The ones you've heard about at MF Global, Revco, Enron, there's so many things like that. And that's not futures, but it's just normal. It's sad, but you have to flush out, as we mentioned earlier, you have to flush out some of these nefarious players, the weak ones, the people who've never really had proper training in running money. Got to flush them out. And that's the key thing cryptos have been needing for a long time. So I'm sorry that I still think things like Dogecoin and Shiba Inu are just silly, stupid speculation. And it's, speculators are supposed to lose. Over time, they almost always do in the long term. But what comes out of this is the same thing that's come out of the collapsing railroads and collapsing in bike stocks in the 18th century in Europe, and collapsing the internet to get things like Amazon and Google. And I like to compare the volatility of Bitcoin right now is actually on an annualized basis is exactly the same as Amazon. It's 1-to-1. Amazon is, giving that example, is 25 years old and showing growing pains as the world towards recession. And then you have this asset class that's never happened before. Like I said, 24/7 fluency trading, no one's project, no one's liability. It's in early days. I look at it, so the risk is not having some of that in your portfolio.
Mike McGlone, Senior Macro Strategist and Commodity Strategist for Bloomberg Intelligence. I appreciate your thoughts today. Good to see you, Mike.
Thank you. Good to see you.
Thanks, Mike.
And we're going to take a quick break. We'll be back with Frank Curzio and Adam Sharp next. Welcome back to Going Digital, Investing in the Future of Bitcoin and Blockchain Technology. I'm Daniela Cambone, your host, joined by my co-moderator, Darcy. Darcy, how are you enjoying it thus far?
I think it's great. It was a great discussion with Mike. He's very, very articulate and very knowledgeable in the commodity space and has a lot of insights into cryptocurrency.
Well, we're going to bring on our next guest now. One of them was quite shocked by the FTX fiasco, and we're going to find out why. So please welcome now Frank Curzio, CEO of Curzio Research, joined by Adam Sharp. He's a consultant with HIVE Blockchain. Welcome, gentlemen. Nice to see both of you.
Nice to see you again.
Thanks for having us.
Yeah, lots of good stuff to talk about. Frank, I was curious to get your thoughts. I read in an article that you were quite surprised by the FTX fiasco. We all know you as a huge believer in this space. Tell us a little bit what's going on in your head right now. What are you thinking?
I think FTX caught a lot of people by surprise. I mean, one of the largest, and just leading up to that, because we saw what happened with 3 Arrows, Celsius, Voyager, right, which is a couple months earlier, which is June, July, August. And you had FTX buying a lot of these assets, right? They're looking to buy a lot of the distressed assets. They had their name out there with Tom Brady, with Shaq. So, and this was a name that was a lot of people were familiar with, a lot of the younger generation were familiar with. A lot of people had money with them. And to see what happened and what unfolded, plus, you know, researching a lot of these cryptos, one of the biggest things for me that I like to look at is hedge funds and private equity funds and venture funds jumping into these names. And they had a lot of these. They had some of the top names involved. And you would think that that gives you the okay and that due diligence was there, but it clearly wasn't there. And that's what happens when you have a leveraged market. So I think it surprised not just me. I think it surprised a lot of people that happened. And, you know, it hurt the markets. You're seeing contagion. You're seeing a lot of companies. You're seeing they were supposed to bail out Voyager. Now Voyager just not Voyager. Well, Voyager was one of them. Voyager went under. BlockFi just announced it that they have exposure. So obviously, and you know, looking at how many firms, even Genesis, right? Genesis was a big leader in the space as well that might need money. I think this surprised a lot of people, and it put a black eye on crypto in general, because there's people on the fence that want to get into this. You need more transparency, which some companies have. Most don't in this industry. This was a name that was supposed to be transparent. This was a name that was supposed to check the boxes that was okay, and it wasn't, and it clearly hurt a lot of people, and it gives the industry a little bit of a black eye for now.
Absolutely. I mean, talking about catching people off surprise, I just posted an interview I did with Kevin O'Leary, who, as you know, was a spokesperson for FTX, heavily invested in FTX. And I said to him, I said, you're one of the toughest sharks out there. You see through the BS. You could catch red flags. And he's like, I know. And I missed it, you know, so it can happen to the best of them. I guess the question is, you know, and I'll ask you this. Please, no.
No, Scaramucci too. Scaramucci's been on my Wall Street Unplugged podcast, and he's been on plenty of times. And the contacts that he has, Salt Conference, great guy, deep contacts. We know his political ties. I mean, this fooled a lot of people. There's a lot of big funds that were invested in this that they fooled. And I mean, they just announced a big partnership, right? So sometimes that happens. It happens to the best, and it's unfortunate, but we have to wait for this to play out. You're seeing it play out, and you know, I'm just surprised that Bitcoin has been holding up so much, which I think is a very, very bullish sign. I thought it'd be down a lot more here, and I don't know, there is going to be other companies that you're going to see have exposure, but to see how well it's held up over the past 4 months, I would think it would be a lot lower from here. And your last guest, who's you know, Mike McGlone, a very smart guy, said that there's less volatility now in Bitcoin, and that's because, you know, people who had their assets in Bitcoin and Ethereum on certain platforms, if you had on Voyager, if you had on BlockFi, if you had on Celsius, you got locked up. And you're waiting and you're saying, what am I going to do? So what happens is there's less volatility because everyone's taking their Bitcoin off and putting it in cold storage, which is actually, those are the people that are never going to sell Bitcoin, which is actually a good thing long-term for the price, right? Because there's a limited supply. So you're just seeing this adjustment to where we need regulation. I don't know if regulation would have helped here since these are still foreign-based firms. It does help with Coinbase. I think it helps with Silvergate, the short sellers attacking these names. I think those are, you know, names that look attractive here because you could see everything. I mean, Silvergate's regulated by the Federal Reserve. I know short sellers that are coming out. I've seen their short sellers. I've seen their thesis on it, and it's not good enough for me to say that it's fraudulent. I don't see it due to KYC, AML compliance. I'm not seeing that. So Coinbase has 5.5 billion in net cash on its balance sheet. You can see everything. Again, these are publicly traded companies in the U.S. that are fully regulated. Do they have a little exposure? Are they going to hurt due to the lack of demand in trading in crypto? Yes, but they're not fraudulent. I don't see them being fraudulent, which is presenting a very good opportunity because people have to go someplace and trade.
That's a huge point you're bringing up, Frank, because I've had numerous talks with folks who are like, should I be getting off Coinbase? Do I need to go on a cold wallet? I mean, this is, I mean, are you getting that feedback as well? People concerned about being on these type of exchanges?
Not Coinbase. I mean, I have my assets on Coinbase. We have a business account now that's in Coinbase, and because it's insured. So think about all the business accounts through FTX. Think about all these companies, and now you're looking and saying, okay, I need this kind of assurance like it is a bank, and that's what Coinbase offers. So, when I look at Coinbase, I'm not saying it go higher or go lower. Again, it's linked to crypto. I will say that it's not a retail company anymore based on trading, which is what a lot of short sellers think. This is an institutional company. 78% of that trading is going to be institutional. Plus, the USDC stablecoin, the interest that they're going to generate, just the interest income they're going to generate is anywhere from $700 million to $1 billion just in that. So it's a different company than just saying, oh, well, crypto's shot and people are trading less. And yeah, I get that. That thesis is in there. That's why I fell from wherever it came out 200, went to 400. Now, wherever it is, 42, 43 now. I think a lot of that's baked in, but think about the survivors and think about the survivors during the dot-com era. That's how you have to be looking at this industry, because even the good players are going to get hurt. And instead of speculating on some of the cryptos that I've done numerous research on, over 1,000, telling my base that around 90 to 92% are garbage and going to go under. I can't see the fundamentals. I can't see the financials. I can't see anything. The utility tokens, they don't have utility features. Coinbase is a name that just makes sense if you're a real believer in crypto here.
Adam, I just want to get some thoughts from Adam as we're going to wrap soon here. Adam, do you agree that you're surprised by how well Bitcoin has been doing, how it's holding up amidst the fiasco?
Yeah, absolutely. I mean, people like to compare from the peak, but that peak of 69,000 or whatever was hit for about 2 hours or something on one day. So you really have to take a longer look at things when you look at Bitcoin in general, in my belief. And I think one of the things that is helping Bitcoin hold up is the fact that, so it turns out that FTX had created something like 50,000 paper Bitcoins, essentially. So people thought they owned these Bitcoins. They were either wrapped on Solana or just owned on the FTX exchange. And they didn't actually have the Bitcoins to back these up. So it's extremely unfortunate because a lot of people thought they were buying Bitcoin, but they were just buying a paper worthless asset. But, as this leverage comes out of the market and as these bad actors are exposed, I think we're going to continue to see, there's a lot of rehypothecated or paper Bitcoin out there. And hopefully all that stuff gets flushed out of the market because it's essentially diluting everyone else's stake. And the only times you discover things like that is during a really sharp, nasty correction like this. So it's unfortunate, but it's kind of a market cleanse, that it sounds a little crude, but you have to have one of these every couple of years or the bad actors just completely get out of control as they had, like we saw with Celsius and Luna and FTX. So you have to have these events every few years or everything is going to get even more out of control.
Frank and Adam, I appreciate your thoughts today. We're going to keep moving on here. We're going to be talking regulation next, but thanks, guys, for your insights today. Appreciate it.
Thanks, guys.
And all right, we're going to be bringing on Perianne Boring next to talk regulation. I know I have so many questions on regulation right now. She's the founder and CEO of the Chamber of Digital Commerce. Perianne, nice to have you on the show. Nice to virtually meet you finally.
Hi there. It's so good to be here. Thank you.
So let's get your thoughts, okay? Given the drama of FTX, we have BlockFi. Obviously, we saw earlier this year with Celsius, Voyager. Is regulation finally going to be moving faster here? And I'm talking to the US,
that's a great question. It's a great question. I'm in DC right now. I'm actually headed up to Capitol Hill right after we talk. We've spent a lot of time with policymakers over the past couple of weeks. The general sentiment is a lot of anger. A lot of people feel duped. A lot of people have outrage. Policymakers are very upset that they were led to believe one thing about this person in this company. And in reality, it looks like something very different was happening in the operations of this organization. So this has been a big black eye to our entire space, but also all of the policymakers that spent time with this individual and took political contributions from this individual. Our first hearing on this topic is scheduled for tomorrow. The Senate Agriculture Committee, which has jurisdiction over the CFTC, will be holding a hearing on the aftermath of FTX. And the chairman, the CFTC chairman Benham, will be testifying. And we are expecting him to call yet again. He's been making these calls for quite some time to have expanded authority and jurisdiction over the digital asset marketplace. We are also expecting to see a similar hearing in Senate banking, which the SEC, they have jurisdiction over the SEC, and we would expect to see a similar conversation potentially with the chairman, Gary Gensler, coming in and testifying and making the same call to have expanded jurisdiction. This event of FTX, it absolutely is going to embolden and empower the regulators to continue to move forward in enforcement actions and potential additional regulations over the digital asset ecosystem. But however, all eyes are on Congress. There are jurisdictional challenges between these two agencies, the SEC and the CFTC, and it's really Congress that we need to step in to create the regulatory clarity and guardrails that are ultimately going to work for this digital asset ecosystem. So this is an absolutely critically important time for policy conversations for the crypto industry, and we're here representing the industry to ensure we get things that are workable.
And I am grateful, and I am sure I speak for a lot of folks for all the hard work that you're doing. I'd like if you could help shed some light or help me understand why Canada has regulated exchanges, yet the US does not. Is it purely political?
So we have a jurisdictional turf war between the CFTC and the SEC, and this is one of the things that makes the US financial regulatory environment unique from most other countries around the world, is that we have a futures regulator, and there's other regulators involved, like the Consumer Financial Protection Bureau, the FTC, you have Treasury, you have FinCEN, OFAC, IRS. I mean, the list of acronyms goes on and on. But when it comes to exchanges in the United States, cryptocurrency exchanges, they're regulated as money transmitters by the states. So most cryptocurrency exchanges today go state by state, and they receive a money transmitter license in all the states that they have customers and operations in. There has been a much larger conversation going on for years about having a federal charter. But where does that federal charter go? Who would be the federal entity to register and regulate the exchanges? Is it the CFTC or the SEC? And that is the debate that is underway right now, and it's absolutely critical. What makes this really complicated for companies that are already operating in this space is we do not have a clear definition of digital asset commodities and digital asset securities. And that is the debate that is underway. And we have been calling for clarity on that issue for many, many years. And had that have been clarified, I do not think you would have seen as much offshore activity that gave rise to FTX and made it the third largest exchange in the world. And thus a lot of people and a lot of retail customers lost money in this incident.
Let me ask you, at the time we have left, if you think this fast tracks the SEC approving a spot Bitcoin ETF finally. Could we see that soon or no?
We've been calling for a spot Bitcoin ETF for years as well. We just issued a report in September of this year laying out the case, the political case for it. We've done a deep dive into why we don't have one. For over 10 years, the industry has been trying to bring a spot Bitcoin ETF to market in the United States, and the goalpost keeps moving. And that's been documented in our report. It's called the Crypto Conundrum. If you'd like to look at it and read that in detail, you can. But to give you the summary, the last time Chairman Gensler, SEC Chairman Gary Gensler, testified in Senate Banking, and he was asked, why don't we have one? When are we going to have one? He said he wants to have oversight of the Bitcoin exchanges. Now, this is a statement that doesn't make a lot of sense because Chairman Gensler has also stated that Bitcoin is a commodity and thus not under the SEC's jurisdiction, it's under the CFTC's jurisdiction. But he is holding a spot Bitcoin ETF until he gets his way and Congress gives him jurisdiction over the cryptocurrency exchanges. So this is a political issue at the end of the day.
Right.
We do not see a path forward at this time, which is why it has gone into litigation.
Speaking of political issues, just quickly as we wrap here, obviously FTX, a hugely political story. He was the second largest donor to the Democrats for the midterm. Do you think this will shield the crypto industry going forward? Will this change the landscape at all?
It does not shield the crypto industry. It makes us very vulnerable because politicians who have received contributions from this individual and or other executives that were affiliated with FTX, we are now seeing those members distancing themselves from these people and the larger crypto industry. So it's really important. This is a very important time for policymaking. We are calling on the industry, the good actors, those who are operating with values and regular business operations that we can all be proud of, to come to DC and to explain what you do to differentiate the good actors from the bad. But again, for members who received political contributions from these individuals, they are now making statements saying that they are making donations to charities in their district for equal value. They're trying to distance themselves from this person. So it does not help our case. It does not shield our case. It just makes it that much more of a complicated situation for the industry to navigate through.
Perianne, I appreciate your thoughts. Thank you so much for coming on.
Great to see you. Thank you.
And thank you. We're going to take a quick break. Don't go anywhere. We're going to be back with more great all-star speakers. back with Going Digital, the future of Bitcoin and blockchain technology. I am your host, Daniela Cambone, joined by our co-moderator, Darcy. Thrilled to continue the conversation now with our next guest. He is the head of market research for Bitcoin Magazine Pro. Please welcome Dylan LeClair. Dylan, good to have you on. And just for the folks interested in Dylan, you can go to bitcoinmagazinepro.com to learn more. But Dylan, welcome to the show.
Thanks. I'm excited to be here. It's going to be a good chat.
I think so. I mean, you're one of the more Bitcoin influencers, most popular Bitcoin influencers out there. So excited to get your thoughts. I know that you've been making the round saying that if this is not just an FTX fiasco or a Bitcoin downfall, but it's a bursting of the everything bubble. Tell us your thoughts here.
Yeah, I guess so. Just to simplify my personal Bitcoin thesis, why I kind of champion Bitcoin itself and like to separate it from crypto is I believe that there is a 100, 200, 300 trillion dollar problem in the world, potentially the biggest problem in the world. And it's that the cost of capital is fundamentally broken, right? The price of money is centrally planned. We're 50 years into this global fiat currency experiment, and we're reaching a point where debt burdens across the world are so bloated that the only way out is monetary debasement, is financial repression across the board. Inflation higher than interest rates. So the everything bubble in terms of whether it's stock market valuations, housing market, zero interest rate policy, negative yielding bonds and nominal. Just 2 years ago, there was $20 trillion of global wealth of bonds where you would pay $100 and to receive 99 back in say 10 years or 20 years. So what is this? This is a global everything bubble and it's unwinding. We're seeing fixed income drawdown across the board. Well, really everything, right? And so with that, obviously Bitcoin and broadly crypto, which I personally think is mostly just warrantless speculation, unregistered securities, and a lot of fraud, just being transparent. Obviously that's been hit, right? So we see these bucket shops collapsing, these yield services collapsing, and really everyone that was swimming naked is going under. And what's Bitcoin doing? It's producing a block every 10 minutes. Nothing has fundamentally changed, and hash rate's at all-time highs. So the story is unchanged. Bitcoin's exchange rate's down, but that's nothing but a thing. So my personal Bitcoin thesis is unchanged. It's as strong as ever. And I think really the macro people don't understand what this is, and the crypto people also missed the boat. And so I think there's, Bitcoin has probably the best asymmetric bet over the next decade, and really no one understands it.
I posed this question to Mike McGlone too, and I'm really curious to get your thoughts because obviously I feel it like your core belief has not been shattered yet. A lot of other investors I'm speaking to are thinking, well, now I don't know, is Bitcoin the fastest horse in the race? Why should we believe that this technology is going to stick around? Why can't there be something better that emerges than Bitcoin?
Yeah, so what you have to ask, and really when people say Bitcoin is the first iteration, how do you know it's not going to be replaced? Well, it's not. Bitcoin is not the first iteration of digital cash. It's the first iteration that worked, right? What Satoshi did is he basically created an engineering solution in an open source manner, airdropped it and left, and never took any coins for himself. And really, there's no one that can fundamentally change the protocol, right? So you can spin off a new iteration of Bitcoin, right? If you think of Dogecoin or Litecoin, right? These are just Bitcoin forks. And really, when you look at digital networks, it's a winner-take-all dynamic. So what Bitcoin did is it combined the digital world, right? There's the information is completely, it's able to be copied at almost no cost, right? So we've always had the reason that financial intermediaries, MasterCard, Visa, the banking network, SWIFT network, the reason that you need third parties is because there's no way to transfer value across the internet without a trusted intermediary, without a centralized third party. What Bitcoin did with basically solving the double spend problem and combining proof of work and the difficulty adjustment is it combined the physical and the digital world, and it did that through proof of work, right? So there's a tangible cost to not only produce a Bitcoin, but when you send a Bitcoin, I can transfer digital value in a bearer asset type way. And so this is unlike any other network. If you think of proof of stake or any of these other altcoins, right? These are just more or less databases that may or may not exist on a few other computers, but there's no tangible cost here. This is the biggest thing. Bitcoin is not just this it's an intangible asset, right? So people say, well, it's a speculative bubble. There's nothing backing it. Well, what they misunderstand is that if you want to produce a Bitcoin, you either have to acquire it or expend a whole lot of energy to make one, to produce one. And guess what? That marginal production cost of a Satoshi or a single Bitcoin is going up forever in a programmatic way as hash rate goes up and to the right. And guess what? Hash rate's at all-time highs. So people really, like, if you think of this as a commodity, which it is, right? It's a digital synthetic commodity. It's a monetary commodity on an open neutral network. Well, why is it harder to produce than ever before? And what's that future trend look like? And that's only up and to the right. So yeah, exchange rate's down 80%, but has the story changed? No.
So because it's our first time speaking, I'm just curious, do you have a forecast of where you see the Bitcoin price headed? And I'll give you a timeline, over the next 5 years.
Yeah, up, right? Like there's two things here. There's the BTC USD. Every single asset on the planet is just a fraction, right? It's the numerator and the denominator. The denominator in this case is the USD, right? The numerator is BTC. You have people all over the world that are acquiring this asset, and you have a huge and growing cohort of people that are price agnostic accumulators. So my job, I look at a lot of data. I look at data 10 hours a day. We can see that there's more people than ever that are basically price agnostic accumulators of the asset. 70% of this asset hasn't moved in over a year. 80% of this asset is quantified as long-term holders, and we can go into the specifics of that definition if we want to. We have the most week over week, month over month coins that are leaving exchanges ever, right? So why is that happening? And it's because people realize that they don't want to trust counterparties, and they want to hold this thing, and they want to hold it themselves, right? So price is set at the margin for any asset, right? Obviously, with this global everything bubble in the midst of bursting, the USD, part of this fraction, this denominator, is increasing in value, right? So stocks, bonds, real estate, any asset class is falling. Rolex watches, you name it, right? But the BTC aspect of this, across the board, whether you're looking at wallets, HODL metrics, hash rate, whatever, it's all at all-time highs, right? All you've had happen is that the excessive leverage has been wiped. And basically, the leverage that was not transparent and it was obfuscated in the crypto space, including fraud, right? FTX was fraudulent. There's no denying that. All of that is just getting eviscerated, right? It's getting wiped. And eventually, we get to the point where all of this mark-to-market leverage that can be wiped is wiped. We saw the same thing happen in 2017, during 85% Bitcoin was dead at 3,000. Well, it didn't die, right? Bitcoin dropped 55% in a day in March 12th of 2020. It didn't die. Why didn't it die? Well, the system was fundamentally unchanged. There's just an exchange rate clearing mechanism to the downside. And so that's what we're doing today. Certainly, can the macro pressures intensify? Is Bitcoin going through its first recession as an asset class? Yes, it is. But in 5 years from now, if you're telling me that the fiat system we live in today of stocks, bonds, 401ks, national debt, interest rates, basically entitlements, military spending, and interest expense being way, way above our current tax receipts. If you're telling me that that's not going to be the solution, is only one thing, and that's money printing. That's debt monetization by the Federal Reserve, right? So there's two things. So we have this basically solution, or this problem, right? It's that the fiat system requires perpetual credit expansion to persist and exist. That's a fact. It's a fact of this debt-based monetary system. There needs to be perpetual credit expansion or the house of cards collapses. And there's nothing backing the debt itself except debt. There's no gold at the base layer, it's only debt. The other part of my thesis is that now we have an engineering solution. The engineering solution is a neutral, apolitical monetary protocol that's open and anybody can use it. And yeah, once every 4 years, is there a whole lot of leverage and fraud and speculation? Of course. And that's why we're wiping it out. And that's why fundamentally I don't care one bit. Like has my net worth gone down a little bit since the highs? Sure. But it's nothing but a thing, right?
Yeah, I think I'm fascinated by your thesis and your point of view that you feel that fiat currencies will suffer the same fate as FTX, and it definitely merits a longer interview since it's obviously a deeper discussion. But I'm curious to know why you think gold wouldn't be part of that solution. What happens if a gold-backed currency were to emerge as part of the next monetary reset?
Yeah. So what gold bugs, and I agree with the thesis. I just think that we have just a superior engineering solution. Like you have to ask yourself, why did gold fail? And some will say, and I agree, gold didn't fail, right? It just got co-opted by the state. But why did gold get by the state? Here's a stat for you, right? So there's been 2 times in the past 100 years or so where stocks and bonds have fallen by 20% in a year, in the same year. Right? There's actually been only a few years where stocks and bonds have both returned negative year over year, and both of these times were double-digit, 20% plus. It was 1931, 1969, right? 2 years after both of those instances, 1933 and 1971, what happened? The U.S. defaulted upon its debt. What do I mean by that? And people will say, no, the U.S. didn't default. Well, they did. In 1933, FDR confiscated your gold, and 6102, they made you turn your gold in, and then they revalued gold higher instantly. What did that do? From like, I think, $20 to $35 an ounce. What were they doing there? Well, they revalued the debt burdens lower. They devalued the currency against the bearer asset, right? What did they do in 1971? The French and other countries were saying, hey, we want our gold. We were on this post-Bretton Woods kind of central bank gold standard where central banks could redeem their US dollars for gold. The dollar was pegged to gold. Well, Nixon and the US government said no, right? Because here's the thing, right? Gold has portability across time. It doesn't have portability across space. Gold is not saleable across space. It can't function in a global economy. I can't have a bar of gold in my back pocket, right? So you need to abstract paper IOUs, digital IOUs, whatever it is, but there's trust inherent in that system, right? So the reason it was co-opted, the reason that the US was defaulted upon this promise twice is because you need to trust a centralized intermediary. So when someone says, well, we could return to a gold-backed standard, I say, well, why won't it be co-opted again, right? Like what's happening right now with a bank run on all of these institutions, with a bank run on FTX, with a bank run on Celsius, with a bank run on BlockFi, and all of these institutions collapsing is an utter evisceration, vaporization of all of this paper Bitcoin. There's a reason that I can audit this entire system.
But there's also a reason, and I don't want this to become I don't want to have a gold versus Bitcoin debate with you, but there's also, if you're going to say gold has failed, I think you have to look at it from a preservation of wealth standpoint, right?
Yeah.
And also bring up the fact, well, if gold has failed, why have central banks purchased 400 tons of it just in the third quarter, records we haven't seen since the 80s if gold is failing? So obviously central banks, governments are clued in on something here.
Yeah, of course. No, I say gold has failed, not in the sense that gold has failed to preserve your purchasing power. It has done a tremendous job of that. 1 ounce of gold is a fine man's suit. It's been that way for the last 100 years or longer, yes. Right? So it hasn't failed in that sense. And I think that's one of the things where when someone says, what happens if the US bans Bitcoin? Well, I'll say there will be people around the planet that will accept this regardless of government mandate. But the reason that gold, when I say failed, I say failed as a medium of exchange, no one is transacting in gold IOUs anymore. Why? The world was on a gold standard, and it wasn't on a gold standard due to any government mandate. And now we are in a world where 7 billion people use free float fiat currencies. So why is that a thing? Even though central banks are accumulating gold, the US has gold in Fort Knox, et cetera. Well, it's because there's that trust inherent in the system where you need to trust a centralized third party to not fractionally reserve your gold. And that trust is obviously the history of money and economics and human incentives says that trust will be broken. And it's the same reason why FTX said their customers had 70,000 Bitcoin and they had 0, right? So the ethos of Bitcoin is don't trust, verify. I don't hold any Bitcoin on exchanges and never do. Why? Because I buy Bitcoin, I send it to my own wallet, and I audit all 21 million Bitcoin every 10 minutes. And I don't need to trust anyone to do that, right? It's trivial. So the future where Bitcoin is a $10 trillion, $100 trillion, that sounds ridiculous, right? A $10 trillion monetary asset. Well, the reality is you have a globally distributed network where you can audit the entire supply in a very trivial fashion from my smartphone, right? And you can't do that with gold. You need trust. So in a digital world, right? I'm 21 years old. I'm very young, and so maybe I have a lot to learn. That's a fair statement. But when I think about where the world's going in my lifetime, I don't think we're going to go to a world where I'm saving in a gold-backed ETF that JP Morgan has in their vault. I actually prefer a world where I have Bitcoin in in a cold storage that I can audit and I can access in 5 minutes if I need to, and it's mine and it's mathematically mine, and I have all of my money in my head, right? That's the future I see.
Dylan, it's clear that your faith has not been shaken despite all the drama, and I'm sure that's going to put a lot of folks probably listening at ease. So I appreciate your thoughts, Dylan LeClair of BitcoinMagazinePro.com. Darcy, any insights?
Oh, I thought that was great, as you'd mentioned, is having somebody that is so passionate and his path hasn't changed.
Clearly.
I love hearing that, because we've heard so much negativity and after the FTX, and no one's knowing sort of what's happening after that. Someone that's sticking to their guns, and it's enlightening. It's refreshing hearing that kind of a narrative, because that's how we feel a little bit within this industry.
And honestly, I think this is the goal and the purpose of this conference is to show the differing points of view, and obviously Dylan unfazed or unshaken, I should say, by the drama. Yes. So we're going to take a quick break, and we're going to be back with Mark Yusko. Very excited to speak with him with everything going on. So quick break, Mark Yusko coming up. everyone, to Going Digital, the future of Bitcoin and blockchain technology. I hope you're enjoying the conference thus far. Joining us now is a huge name, obviously, in the space. I'm personally very excited to have him on, given everything that's going on. So please welcome now Mark Yusko, founder, CEO, and CIO of Morgan Creek Capital Management. Mark, good to see you.
Good to see you, Danielle. Thanks for having me on.
Absolutely, and I'm joined by my co-host, Darcy. We're both very excited to speak with you, Mark. I guess my opening question is, just set the stage for us here. Let me know where your mind is at, where your head is at. Obviously, Morgan Creek been in the headlines with this FTX fiasco. Just give us your take on things right now, Mark.
Ooh. Not sure I want to go completely into my take on the FTX thing, because the black hats may show up at the door. But look, the fact that Sam is going to speak today at a conference rather than being behind bars is I don't even know what to call it. Travesty, comical, sad, just crazy. So,
would you say heroic or cowardly or just
cowardly?
stupid?
I mean, completely cowardly. I mean, it's just, look, it says that there's something bigger than what actually went on. I mean, we know from the guy who came in to clean up the mess that it was a bigger mess than Enron, right? Less controls, worse accounting, more fraud. Okay, Enron was a pretty big mess. So this is worse than that. I'll argue that, after watching a lot of content from Sam and Caroline, they're not the masterminds. No chance of that. So I don't think this was neglect. I don't think this was a mistake. I think this was cold, calculated, intentional destruction by somebody much higher up in the food chain. And these two are useful idiots. And I use that term intentionally. So, again, I don't want to go too deep here because, people don't want to talk about the past. They want to talk about the future and how we're going to recover. Look, I've been talking about this for a while, that
I know.
The first... Did you lose me?
No. I'm just listening intently.
Oh, no, I was going to say, the first 5 or 6 years of the digital asset space were what I call the Gandhi quote, the first they ignore you. So from 2009 to 15, a bunch of nerds and geeks playing with your magic internet money, knock yourself out. Then they laugh at you. So, 16 to 21, look at those nerds and geeks playing with their magic internet money, ha, ha, ha. Then they fight you. So, from this year, and unfortunately, I think for the next few years, they're going to fight. And not only are they going to fight, I believe the regulation coming down because of this FTX debacle is going to be punishing. It's going to be onerous. It's going to be intentional to thwart and to delay the inevitable. The inevitable is, like the quote says, right? Then you win. The reality is, as Dylan was saying, if you're here in the space, you've already won. Right? This is the future of money. This is the technological future of truth replacing trust. That isn't going to stop just because the trust agents, the middle people, like extracting rents. Look, there's $7 trillion per year at stake. So let that number sink in for a second. $7 trillion with a T dollars per year extracted by the banking. I used to say cabal, but I heard that makes some people mad, so I'll call it cartel, that they extract rents in the form of late fees and service fees and transfer fees. And, all those fees add up to about $7 trillion. And it's unnecessary. And we're going to capture all that wealth through digital assets and crypto. But it's going to take a while.
I'm personally I have my vested interest of getting your thoughts, Mark, because I think that you've always made such a sensible and grounded case for Bitcoin. I've seen you have doubled down on your 100,000 predictions since this drama has unfolded. So you as well, I'm seeing that your faith not shaped by this. I'd like to know how come, because a lot of investors are scared now. Won't government come in, over regulate? Could there be an outright ban? They're thinking, should I be taking out all my Bitcoin and saving whatever I have left?
Yeah, so there's a couple of things. Well, there's actually a lot of things in that very good question, right? Which is one, the run on the banks that is happening is not the failure of the banks, right? It's banks are not meant to withstand runs. And the history of banking, right? We have 800 plus years of history around banking, and there have been lots and lots and lots of failures. And yet, most people listening to this have the bulk of their money in a bank. Some have a lot in crypto as well, but most people still have the bulk of their wealth in banks. Why? Well, because we trust them. Well, we trust them despite the fact that in the global financial crisis, a whole bunch of them went out of business. In the savings loan crisis, a whole bunch of them went out of business. In the Knickerbocker Trust crisis in 1907, a whole bunch of them went out of business. In the free banking era in 1840s, a whole bunch of them went out of business, and go back for centuries. And now we have a better solution, right? We're replacing trust with truth, which is what Bitcoin does. And again, you were talking with Dylan about this at the end. Gold didn't fail, right? Gold has been a perfect store of value, but not in the last 2 years, right? The price of gold is basically unchanged. It's up a little bit. It should have doubled over the last 2.5 years. Why? Well, because they doubled the money supply. Again, let that sink in for a second. We've been a republic for 246 years, and they doubled the supply of dollars, doubled in the 2-year period following the lockdowns in 2020. So it's not that gold got better. It's not that Bitcoin got better. 1 bar of gold equals 1 bar of gold. 1 Bitcoin equals 1 Bitcoin. But we don't price in gold, or we don't price in Bitcoin, right? If we did, right, the S&P 500, which everyone's all excited is rallying today, it's dead flat since 1997, priced in gold. Oh, no, market. It made all-time highs. Well, yeah, because we price it in toilet paper. We price it in dollars. And so Bitcoin is up precisely 100% since 2020. But market went down 60%, 70% since the all-time high. Yeah, because people are greedy and people push prices away from fair value. The fair value of Bitcoin was never $69,000, even when it traded at $69,000. The value of the network at that time was closer to $30,000. Now, the value of the network has actually declined, believe it or not, for the first time, because people stopped using the asset. They hoarded, right? They rejected the CeFi experience. And here's the thing. If the message that everybody wants for Bitcoin is we all need to hold our Bitcoin on a thumb drive and bury it in our backyard, we should all just go back to our old jobs, because we already have that. It's called gold. We've had it for 5,000 years. And gold's actually better. It can't get corrupted by an electromagnetic pulse. It can't get corrupted by water. Oh, but it's on chain. But there is a chance that, all the nodes could go down. Not a high chance, but, gold, it is what it is. You can't melt it. You can't evaporate it. You can melt it and change its form. But what we need is for Bitcoin to become the base layer of money. That's why I keep saying why I believe it will be $100,000 and then $250,000 and then higher, because that's the monetary value of gold, right? There's $10 trillion of gold above ground. Half of it is in jewelry, chalices, gold leaf on the top of the Golden Dome at Notre Dame, right behind me. all of that doesn't really count. The monetary value is the only money that exists in the world. There's only one money in the world, gold, right? Everything else is credit. Everything else is a currency. Currency is backed by debt. Every central bank in the world has gold. Some of them have less than they used to because, as Dylan said, they moved off the gold standard and went to a fiat standard where they could devalue the currency faster because they had too much debt. But where is the gold going? It's going to China, which I believe will be the next global reserve currency. Eventually, it'll be Bitcoin. But in the future, Bitcoin wins because it is an asset that exists in the absence of a liability, which is what the definition of money is. And so it is superior to gold. Like if I had a bar of gold and I wanted to split it 3 ways, I couldn't bang it on the table and give you each a third. Too hard to do. And I couldn't stuff it in my computer and send it to you. But if I wanted to send you Bitcoin, I just punch a couple buttons and boom, I could divide, a Bitcoin into 3 pieces and send you both a third. Easy. So it does have advantages in being more portable and more divisible than gold. So I think it will eventually replace gold. 5 trillion monetary value of gold roughly equals $250,000 price per Bitcoin. Now, that won't happen tomorrow, but over time it's going to happen. Yeah. And the $100,000 number comes from the value of the network over the next couple years as we get into the next bull cycle after the next halving. So what the halving does, it was actually a genius element of the design. So the 21 million is genius. And I think it's really interesting. I have this friend, Lisa Huff, and her daughter came up with this idea of why there's 21 million Bitcoin. Right? We all know that Satoshi Nakamoto's birthday is 4/5/75. Why is that? Well, 4/5 was the date in 1933 of the issue of Executive Order 6102 that Dylan talked about. Well, 1975 was when we went off that, and it was legal in the United States to own gold again. So we could own money again. So that period from 1933 to 1975, it was illegal to own money in the United States. So people still did, but it was actually technically illegal. So that's Satoshi Nakamoto's birthday. It's not then a coincidence that Bitcoin was born in the middle of the global financial crisis where money was being assaulted by the trust agents, and we bailed out the banks, right? The first message in the Bitcoin blockchain and the Genesis block is the picture of the chancellor bailing out the banks. And so this young woman, she's only teenager, she said, well, 6102, 21 and 6 zeros is 21 million. Oh my gosh, that's awesome. It's brilliant. So that's probably where 21 million came from. But there will only ever be 21 million Bitcoin. We can't create more. We know how many are going to be created. But the genius was every 4 years, we cut the number of block rewards. And if you think about it, the miners who basically use computing power to secure the network, Bitcoin blockchain is the most secure computing network in the history of mankind. It's 1,500 times more powerful than the CERN supercomputer, which is the next most powerful computer in the world. And it has never been hacked, not once. It's been up 99.999% of the time, not one fraudulent transaction. How many times you had to get a new Visa number because of fraud? Plenty. So the Bitcoin blockchain is the future. But when those block rewards go down, the price has to go up. Why? Well, because the miners' costs are roughly fixed, electricity and machines. So in order for them not to all go bankrupt simultaneously, the price has to rise. And as the price rises, that attracts new entrants, right? Movement is what attracts new entrants. And that's why we get this 4-year cycle. But if you notice, every year, the low is higher. Now, this year will be one of 2 years where that didn't happen. But in most years, the low is higher than the previous year, and the highs are higher than the lows, and that's because the network is growing. So Tim Peterson, friend of mine, runs N Squared Crypto, did a model. The original Metcalfe's Law model predicted $100,000 in 2022, this year. And the stock to flow used that, and everybody else used it. And the problem was the decay factor for the Metcalfe's Law model was too low. Tim increased the decay factor, said there were going to be people that drop out of the network. And so he did a new model, and it says that 100,000 sometime in 2023, 2024, around the halving, which is kind of January, February, or maybe it's February or March of 2024. So it's a long answer to your question.
No, it's a good answer, and I hope I can get through my next two questions that you just made me think of. When you say that you see Bitcoin replacing gold, help me understand how you would have to change the belief system of the Chinese, of Indians, of central banks. I mean, is this a multi-generational point of view that it would take, centuries to change? How would
it's a multi-decade.
How would that happen?
Multi-decade. No, it's a multi-decade view. Look, things of this nature happen in decades, not days or months. So world reserve currencies have a shelf life of about 70 years, 7 decades, 7 to 8. So you go back to the 1400s with Portugal. Portugal? Seriously? Portugal? World reserve currency? Yep. Why? Because they had the tallest trees, therefore they had the tallest masts, they had the fastest ships, most powerful navy. And the way you secured your world reserve currency status was by having a powerful navy. So Spain takes over Portugal, they get this faster ships, then France takes over Spain, then the Netherlands takes over France, then London or the UK gets the steam engine, so no more sailing ships, now you got powered ships, then we get nuclear subs, and so now we're the world reserve currency. Well, what China figured out a decade ago is the next war ain't gonna be fought with ships, be fought with chips. So now it's not about naval superiority. They don't care about how many aircraft carriers. They care about superiority in AI, 5G, and computing power. 96% of AI citations this year come out of China. So they, I believe, will be the next world reserve currency. Well, then where does Bitcoin fit in? Well, Bitcoin then becomes ultimately, as you say, a belief system, right? All currencies are currencies because of belief. There's nothing that backs any currency, right? If you hand a green piece of paper to the government, $20 bill, they don't give you $20 of gold. They don't give you $20 of silver. They don't give you $20 of future tax receipts. There's nothing, right? And they don't even use green pieces of paper in Israel. They use yellow pieces of paper. And in China, they use red pieces of paper. It is simply belief and custom. That's what makes a currency a currency. So the custom has been that central banks, right? Central banks didn't exist before 1607, when the Rothschilds created the first central bank. And the Netherlands was the world reserve currency at that point. And then part of the Rothschild clan moved to London, opened up the Bank of England. England became the superpower. And then we, using the same model, started the Fed in 1913. It took us 31 years to become the world reserve currency in 1944, after the war. So Bretton Woods. So what happened? Well, the UK was the world reserve currency. What did they do? They incurred a bunch of debt by invading Mesopotamia, fighting a war that they shouldn't have fought. And they got into debt. The pound sterling collapsed. We ascended. We became the superpower. The dollar ascended. China then essentially, we then invaded, coincidentally, Mesopotamia, wars we couldn't finance. So our debt level went up. So now the only way out is to print money. And so the Fed said today, or the reason stocks are rallying today, is, we're going to slow interest rates. Well, of course you are. And then eventually next year, you're going to cut interest rates and you're going to print more money, because the only way out for an empire that's overly indebted, okay, even if they tried to tax all the wealth in the United States, couldn't pay back the debt. Okay, so then you could restructure the debt, but in order to restructure it, someone would have to take 70 cents on the dollar, 60 cents on the dollar. Chinese aren't taking it, Russians aren't taking it, Belgians aren't taking it. You can default on it, the Argentinians do all the time. But if you default, what happens? You get kicked out of power. So you don't default openly, you default, as Dylan described, you devalue the currency. So that is exactly what's happening right in front of our eyes. Now, everyone talks about the strong dollar. It's not strong. DXY is not the dollar. DXY is the relative value of the dollar versus the yen and the euro. Okay, the dollar is toilet paper or crepe paper, and the yen is super toilet paper and the euro is just toilet paper. I mean, the yen has been absolutely massacred, down 40% this year. So we look good by comparison, but versus the renminbi, we're dead flat over the last 2 years. So the renminbi is ascendant. And so to answer your question, Danielle, what's going to happen is central banks used to have just gold. Then they had gold and dollars, and then yen and euros. Now they have some renminbi. Eventually, they're going to have some Bitcoin. Who's going to be first? I don't know. Estonia, maybe, China, maybe Russia. But eventually, they're going to have some Bitcoin. And then eventually, Bitcoin will edge out gold. But it won't happen in months or weeks. It'll happen in decades, plural. Because remember how an S-curve works. An S-curve of adoption takes 30 years. First 10%, 10 years. Second 80%, next 10 years. And the last 10%, the late stage over the last decade. So I call it 10 years in. The first 4 years were total science project, really doesn't count. So we're about 10 years into the S-curve. We're at about 11%, which is about where we should be. The next 10 years, we'll get 80% adoption. Pretty amazing when you think about it. And then the last 10 years, we'll get the last stragglers. But, I think it's a 10 or 20 year process of having central banks around the world realize that in order for them to have a viable central bank asset, they'll have to have gold and Bitcoin and a few other, major currencies in their basket.
Interesting thoughts, Mark. I have so many other questions for you. So you know what? I'm going to invite you right now onto my show for more in-depth talk for my.
All right, let's do it.
Thank you. Yeah. So many other questions for you. Really great. I always love talking with you. Thank you, Mark.
No, thanks, y'all. Have a great rest of your conference, and appreciate you doing this. Appreciate you focusing on education and giving
absolutely
like myself and Dylan and others a chance to chat.
Absolutely. Education is key, especially in times like this. So we're going to take another quick break, and we will be back with our last few speakers. Don't go anywhere. are back from break. Welcome back to the conference, Going Digital, the future of Bitcoin and blockchain technology. I am Daniela Cambone, your host, joined by Darcy. Darcy, so far so good, right? So many good thoughts from all these speakers.
It has been, quite a variety, and it's unfortunate we don't have longer. But as you had mentioned,
I know.
probably grab some of them onto your other program.
Absolutely.
And I'm looking forward to listening.
Absolutely. Well, let me bring on our final panelist today. Eric Wade is my colleague at Stansberry Research, so I'm thrilled to see him again. Eric Wade is the editor of Stansberry's Crypto Capital. Eric, good to see you. And Nick Giambruno, another longtime friend of mine, founder of the Financial Underground. He also owns internationalman.com alongside another good friend, Doug Casey. So nice to see both of you. Welcome to the conference.
Thanks, Daniela. Great to see you too.
Yeah, so I'm going to try and cover as much ground as we can with the time we have. Just to sum up two key points from both of you. Eric, you have said that in the wake of FTX, you believe investors need to immediately remove any assets on centralized crypto exchanges. And Nick, you, like our other speakers, I feel are also still strongly believing in Bitcoin more so than gold. Let me know if I'm wrong on either of those theses. But let's start with you, Eric, because I spoke to you before this FTX breakout. Your thoughts on it? Were you surprised? Did you see it coming?
I was very surprised on it because it looked like it was well run, and the fact that they were pushing for regulations, regardless of whether you liked what they were pushing for or not, they were sending out all the right signals on this. And at the end of the day, it was a bank run, and that did them in, and they were propped up by assets, and those assets didn't withstand massive withdrawals. So wait, were you asking about FTX, or are we talking about American banking system? I think I may have mixed those two up there.
FTX.
Yeah, obviously what happened to FTX, no bank in America could withstand that. So I think it's kind of interesting now that there's all kinds of hey, look at how bad those guys are and how terribly they were running their ship. Sure, their accountants, if you can find them, should be fired. But no bank could have withstood that. And I think it's amazing that everybody's saying, wow, that was terrible. That was horrible. Do not withdraw your money from my bank all on the same day, or we'll see this 1,000 times over.
So do you feel for Sam Bankman-Fried, Eric? Do you think he's just been used as a puppet? Do you think he deserves jail time?
Yeah, I'm still waiting for the Great Financial Crisis 2008 jail times to be doled out. So I don't hold a lot of hope for that. That's not for me to decide. I don't know enough of the facts of what his intents were. If this was just a very poorly run operation, I'm not real big on throwing people to jail for big, dumb, stupid, obvious, glaring mistakes. But if it turned out it was something that they were intending to fraud, then yeah, absolutely, there should be jail time for that. And I'm not the one to decide that.
And I think, I just had Kevin O'Leary, who was obviously heavily invested in FTX, basically, echoing what you're saying, that we didn't put the banksters in jail. But I think moving forward, what are the lessons as a crypto investor that we should or should not be doing? I mean, what's the number one lesson for you here?
It's the lesson of go back to the basics. Why do we have a Bitcoin? It's because in 2008, you remember TARP, troubled assets, when the subprime lenders got in so much trouble that nobody could figure out how to unwind, who held what assets, etc. That was one of the main kernels for, well, what if you could own your own assets beyond question? with Bitcoin, right? The idea that I could pull my Bitcoin into my wallet, that I could find them at any moment. That was somewhat new. I mean, we all thought when we all started investing as children, what's the first thing you do? Self-custody, right? Grandma gives you a $20 bill in your birthday card, you self-custody it for a while. Then we grow into banking, then we grow into investing in stocks, and we grow into owning our own business, etc. We stop self-custodying. But Bitcoin came around and said, well, what if we could? What if we could self-custody a digital asset? So what do? Pull your assets. Hey, how about this? How about pull all of your assets into your own custody, not just Bitcoin? You can with Bitcoin. And if you can't, you should really worry about where your Bitcoin is. But any cryptocurrency, let's hold all assets to that same standard. Why don't you go pull your dollars into self-custody and your gold and your art, everything, pull it into self-custody. Let's just see what happens. And you've got till January 3rd to do it, or else you'll be the last one doing it.
Because, in my interview with Kevin, he was saying how he's now pulled everything, he's putting it all only on regulated exchanges in Canada, and he would only invest in regulated exchanges. So what do you make of that strategy, Eric?
The water in Flint, Michigan is regulated. Banks are regulated. Our children are regulated to go to regulated schools, to take regulated classes, to take regulated tests, and half of them are graduating and they can't read. Yay, regulations are coming. We're going to save us all. Mortgages were regulated. The IMF is regulated, and they just airdropped $650 billion onto us last year. What are regulations going to do? Is there I would love to see the regulations that are going to take care of all of this. FTX had an inflated asset on their books. What regulation would have caught that? They had an inflated asset. What's next? Real estate, art, gold. If you inflate an asset and then you borrow against it, they could have been regulated up and down. And an inflated asset that popped took everybody else out with it. I don't hold out a lot of hopes for regulations fixing that.
I know. And from our last conversation, you were when I had asked you the regulation question, you were hesitant, basically echoing what you're saying here. But is your concern now that regulation will come faster and quicker given the series of downfalls we've seen?
Yeah, your interview lit a fire in me, and we're going to get more regulations, and we're going to split the industry in half. And we have a ton of regulations. I mean, if you should be a corporation, incorporate. If you should be a LLC, form an LLC. If you should be paying taxes, pay your taxes. If you should be a security, or you want to act and look like a security and raise money, we have regulations for all that. We're going to get more regulations, but we have regulations. Just follow them. On the other hand, though, what regulation should Bitcoin be following? And my pithy quote is, you can't regulate cryptos. You can regulate me, an American. You can regulate Brazilians. And I don't know if you saw the news that Brazil is very close to passing a law. I think they just need the president's signature that says we are going to allow people to trade Bitcoin, and they're going to split the regulation. I think this is actually pretty smart. They're going to split the regulation into the central bank handles it if you're treating it like a currency, and their version of the SEC handles it if you're looking at it as an investment. That's actually kind of mature for them to figure that out. But Brazil, 12th largest global economy. So to finish Mark Yusko's thought, it might be Brazil that starts first, maybe Estonia. But once the central bank says, yeah, we can track this as a currency, what if they end up owning some overnight, over a week, over a month? And then they try to do one trade with it instead of SDRs, because SDRs, interest rate on that is 2.47%. Bitcoin internal right now, the inflation rate is under 2, and next year it drops to under 1. It's hard to compete with that. So go ahead, regulate it, but there's still a way around all of that.
I want to just get Nick's thoughts here because Nick, I've read that you say that despite this FTX meltdown, you believe Bitcoin will become superior to gold. And I was like, wait, didn't Nick love gold? What happened?
Oh, I still do love gold. I'm not exactly sure where you got that, but I think over the long term, it's possible, and I think we'll let the market decide. So I come from the perspective of somebody who loves gold, and I still love gold. And I think anybody who honestly looks at gold through and understands why gold is money should like Bitcoin, because Bitcoin, that's how I discovered Bitcoin, was through my understanding of money through gold. And the reason is, I think, because Bitcoin, so Dylan made some very good points about how Bitcoin is superior to gold in some ways, and it is certainly in transportation, portability, and those are very important factors. It is, but I think we'll let the market decide. In any case, Bitcoin and gold are both vastly huge improvements over the fiat currency scam, and it is a scam. These people who are running the central banks are creating fake money out of thin air and getting the whole world to run on a hamster wheel out of a piece of confetti, digital and paper, that they create out of nothing. That's a scam. So as long as Bitcoin or gold dethrones that and that system implodes, I think Bitcoin and gold could do well. Over the longer term, yes, there is going to be a competition between Bitcoin and gold, no doubt. And I say let the best form of money win. Now, there's also a very, very important point here that we have to draw. I believe this is the most important point in this whole debate we're having right now, in this whole discussion. You have to draw a very, very clear line between Bitcoin and all the other cryptocurrencies. Because while Bitcoin is suitable as money, because nobody can change it, That's what makes it important. It makes it apolitical. It makes it neutral. It makes it suitable as money, because if somebody could control it, it would just be political. Now, I can go into the technical reasons for that, but I don't think we have time. But if you really want to know, down below, people, I think, can find a link called How Bitcoin Becomes the World's Next Dominant Money. You can see all the details there. But suffice to say, Bitcoin is the only one that you cannot change. Nobody can change. The Chinese government can't change it. The US government can't change it. Elon Musk can't change it. Nobody can change it. Michael Saylor can't change it. Satoshi Nakamoto can't even change it. So that is what makes it
not
neutral
even Michael
and credible
Saylor.
as money.
Yeah, a few questions there. So do you believe that whatever will become the next reserve currency, if the US dollar gets dethroned, it would have a Bitcoin component?
Well, if Bitcoin is a superior monetary asset, and I would argue it is, all great powers throughout history have had superior money. So if anybody is interested in being the next global power, they better strongly consider Bitcoin.
Interesting. I mean, I asked the question to Eric, but does government regulation not concern you, or an outright ban now? I mean, aren't they going to look at this and say, okay, we got to step in, we got to put in regulation, we might ban it? Is that a concern to you?
Well, as was previously mentioned, there's plenty of regulation. And I think, frankly, anybody who wants more regulation, who wants to give politicians more money and more power, needs to have their head examined. This is a totally bad idea. But nonetheless, it may happen. And you know what? It doesn't matter, because if they regulate Bitcoin out of use in the US, it's just going to go to China. And does the US want to give China on a silver platter the keys to having the next the next dominant world money? That would be completely stupid. So fine, if they want to do that. The thing is that the only regulation is not going to affect Bitcoin. Regulation is going to affect the people who are subject to the regulation. Bitcoin is beyond the control of any government. Nobody can shut it down. And if one country idiotically decides to make it unfavorable, it will just migrate somewhere else. And that is, we've seen, there's been many instances of that. So I'm not too worried about regulation. Frankly, I think it's already highly regulated. What more regulations do you need? And I think this whole debacle, this whole situation, it's a crime. I mean, we'll see when it's proven, but it seems to me right now there was a lot of crime and wrongdoing going on with FTX, which is a cesspool. Just look at what it's involved. It's involved with shady stuff in Ukraine. They're funneling money to politicians. They're trying to use the arm of the state, of government, to regulate their competitors. These people are not good people. So I feel really bad for the retail investors who got suckered into this scam. But the people in charge,
did you see the red flags? I mean, So you were not surprised? Did you see the red flags before, Nick?
Absolutely. Just listen to Sam Bankman-Fried. He didn't know anything about Bitcoin, and he's playing video games on a call with a $400 million investor. This guy's clearly not a serious guy. And if you're going to entrust your savings into an institution run by this clown, that was not hard to see at all.
I mean, it seems to me, and correct me if I'm wrong, gentlemen, that, Bitcoin in a way is paying the price. I mean, I think that's a clear statement that Bitcoin has to be in a separate lane here, but it gets lumped into this whole crypto FTX conversation. And is it paying the price?
Yeah, well, let me just finish real quick. Why is it different? It's different because people can control every other currency. Ethereum is controlled by its developers and insiders. Ethereum pivots its monetary policy more often than the Federal Reserve does. So I would ask yourself this: what is the Ethereum supply going to be in 5 years? Nobody knows. How are they going to pivot? Are they going to pivot once? Are they going to pivot twice? Are they going to pivot 3 times? Nobody knows. I can tell you with precision, down to the exact Satoshi, what the Bitcoin supply is going to be in 5 years, 10 years, 15 years, 100 years. That is certainty. No other cryptocurrency has that certainty because they can all be changed in a trivial fashion.
Nick Giambruno, Eric Wade, I appreciate your thoughts. Thank you for joining me on Going Digital.
Yeah, it was
Thank
great.
you very much.
And happy holidays.
Thanks.
I'll bring you both on my show so we can go more in depth. But that's it for us. I'm wrapping the show here. Darcy, I hope you found this informative, educational. I know I did. And thank you for co-moderating.
Absolutely. No, it's great. And I'm going to be doing a lot of looking up with these guys and reading up on a lot more than I have already.
Absolutely. And once again, Frank Holmes, we're sending you our well wishes. Get well soon, my friend. And that's it for me. We hope you enjoyed it. Going Digital.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.